Welcome Tuesday morning on the floor of the New York Stock Exchange. We are here with our guest, Mark Otto, designated market maker for Knight Capital Americas. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, tell me what is going on today. Yesterday, we recuperated a little bit after a very bad session on Friday. Of course, Alcoa, we know, open officially the earnings season. What is the reaction today from the market?
Well, right now it seems as though the market's undecided. We are up a little bit more on the futures this morning coming in. We've sort of been dancing around flat right now. So I don't think there's anything that's really going to propel the market until later on in the week right now.
Now let's talk about China. Of course, this morning we have evaluated all the numbers that came, in particular the inflation number. The market actually took it pretty well.
Yeah, we saw actually most Asian markets rallied a little off that information. There's more information coming out of China later on this week. We're going to have new yuan loans are going to be reported. They're anticipated to be 900 billion. So that's up significantly from 620 billion. So we also are going to have M1 and M2 are going to come out this week as well. So that's going to be 9.4% for M1 and 14.6% for M2.
Now let's go back to the earnings season. Alcoa yesterday had kind of a mixed results. It seems that the market doesn't know if it wants to concentrate more of the revenue that missed or the earnings that actually were above expectation. A lot of people are just saying anyway that Alcoa cannot be considered the real, indicator of the entire earnings season. We know that the analyst has already revised down the estimates for all the, at least so the members of the S&P 500. We know that the earnings is going to go down, but Alcoa this morning said that they're still optimistic for the rest of the year. Do you expect other company to follow up?
Well, I think you're right. What's going on? Traders have looked at S&P 500 earnings and the fact that corporations are beating down analysts, so the bar is set really low. So we've seen this movie before. They jump over the low hurdle. Most people are paying attention on if they're going to actually meet the revenues, and the forward-looking guidance is probably the most important piece of information, particularly since we're early on in the year right now.
So what are you going to focus this week? Alcoa, of course, was the first, but we don't have any big numbers until Friday when we have JP Morgan and Wells Fargo. What is your attention on this week?
Well, again, the earnings is definitely going to be something to consider, especially if it's a big miss. So that's something that particularly could sway the markets. Tomorrow we're going to have the Fed minutes that are going to come out. So people are going to closely watch that. There seems to always be some sort of information that might sway the market, particularly if they express more concerns of what's going on in the world or anything that's going to actually give a hint at a change in government policies, particularly monetarily. Later on in the week, we're also going to have initial jobless claims. We're looking for 360,000. We're going to have advanced retail sales coming out on Friday. We're looking for 0% is the forecast for that. PPI is also going to come out. We're looking for negative 0.2% on that one as well.
And of course, we're going to look at Asia. I mean, the geopolitical situation over there and what, eventual news that will come out from North Korea. How do you think the market is looking at that? I mean, can you see already some, maybe like the cautious market that we see today could also be related to that?
Well, certainly caution's been in the air for a couple of weeks now. What we're seeing is the fact that, when the market is selling off, it is the sectors that actually drove the market higher initially. So money's leaving industrials, money's leaving from techs and financials. As the market is actually making the rebounds, we're seeing it flowing to utilities and healthcare, consumer cyclicals as well. So that indicates that it's shift into more defensive plays. So definitely there's an air of caution in the market, and it seems as though everyone's sort of waiting for the other shoe to fall.
Absolutely. Now, tell me some numbers for the S&P 500. What are the limit that you are looking at?
Well, right now we're at 1563, so the market's holding up quite well. Right now, resistance on the upside is 1568 and 1573. On the downside, we're going to get support at 1558, 1553, and then 1546 going down.
Great. We'll see, what is the market is telling us by the end of the week. Thank you, Mark, for being with us.
Thank you.
And thank you for watching.